Investing in a brand involves strategic decision-making and a thorough understanding of the brand's potential for growth and profitability. Here are some steps to consider when investing in a brand. Research and analysis. Conduct extensive research on the brand, including its market presence, competitive landscape, financial performance, customer base, and growth prospects. Evaluate its brand value, reputation, and potential for expansion. Understand the industry. Gain a deep understanding of the industry in which the brand operates. Analyze market trends, consumer preferences, and industry dynamics to assess the brand's position within the market. Evaluate brand strategy. Assess the brand strategy, including its positioning, target market, marketing efforts, and product service offerings. Consider if the brand has a unique selling proposition and a sustainable competitive advantage. Financial due diligence. Examine the brand's financial statements, revenue streams, profitability, and growth potential. Assess its historical financial performance and projected future earnings. Evaluate factors such as revenue growth, margins, and return on investment. Assess management team. Evaluate the brand's management team, including their experience, track record, and vision for the brand's future. A strong and capable management team is crucial for driving brand growth and success. Determine investment options. Consider different investment options, such as acquiring equity in the brand, participating in a brand licensing agreement, or providing financial support for brand expansion. Assess the potential risks and returns associated with each investment option.